Here's a quick concept check for you on a pivot point. Now, a pivot point is anytime you see a change in direction in the price action. The minimum requirement for a pivot point is that, as you know, maybe you have a candlestick that's moving down, for example, and then you get a small body candle, just again for example, and you see the next candlestick proceed up. That would be a pivot point where price has changed directions. Same would be true for the top. So if you have a candle up, you had a candlestick up, and then you had a candlestick down. And again, minimum requirement is it takes out the previous low or the previous high in order to define that as a pivot point. Now, here are several pivot points. Just looking at a chart of the S&P, some of them are really obvious. Like you got big V right there. That's a pivot point. That's a pivot point. Out here, that's not yet a pivot point. It needs to really trade below the signal low. Now, if you got a nice candlestick to the downside there, then that would be considered a pivot. Now, the further the price moves away from that pivot point, the more obvious it becomes. Again, big obvious pivots like this all-time low back here on the left, that's a big, massive support zone, as is that all-time high over here on the right. Massive major pivot. Where you see some of these smaller pivots in here, those are also pivot points of support and resistance. And if you look closely, you can even see some teeny tiny ones in here where you have a couple candles to the left, a couple candles to the right. Those also function as pivot points, a little resistance right there. So as a general rule, it requires a minimum of 3 candles to form a pivot point. And again, bottoms we call support pivots, tops we call resistance pivots. They're also known as swing highs and swing lows. Again, a pivot point is a change in price direction.